You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIX volatility products. SPIX options and futures are traded on the SPIX Volatility Index, SPIK, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPIX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
Every Friday, normally it's at noon Central, 1 Eastern time, I record a podcast called Volatility Views. It is through the Options Insider Radio, and normally to get to hear it live, you have to be a paid subscriber to Options Insider Radio, but you guys are going to get it live today. All right? Now, if you want to hear it after the fact, it's released, typically a couple hours after we're done, but you're missing out on our real-time trades live then. And you can find it on, iTunes or, whatever your podcast services of choice. It's on everywhere. And you look up the Options Insider Radio if you want to listen in. And, what makes it kind of cool is because it is literally a podcast based on volatility is on top of the fact we have an amazing retail following. This is literally go-to listening to the vol arb, the super high-end hedge fund guys, because it's about the only place where you can dig into this stuff. So what you might hear might seem, a little bit, but it's not. All right, Chris, come on, you're up. So normally it's usually just me and Mark and a guest, or Mark and Andrew and a guest. But today you get, on top of me and Andrew at the same time, and Mark, we're going to have Chris Johnson come up, and he's going to be our guest extraordinaire, which is super exciting. And I love that, we all called ahead about having our West Coast VC investor outfit on, the jeans and the thing, looking good. So, this is going to be really fun, and I'm really excited that we could do this live because it's such a cool thing to get to do. So,
stealing your water.
Oh, you son of a.
Yep. Have you met Mark?
No, I am mic'd up. He's mic'd up.
Okay.
All right.
Oh,
so,
not that Mark. This Mark.
All right. So,
okay.
Before we officially start, I do want to introduce Mark.
Right.
There are two Marks?
Yes, there are two.
Yeah, it's Mark, Andrew, Mark, and CJ. So, Mark, and this is kind of a cool thing. He was a trader in the IBM pit on the floor of the SIBO, and then he was in the SPX, right? You were IBM, right? Intel.
I started off in the S, then Intel. Yeah.
All right, so he started off in the SPX, then he moved into Intel. So he traded some pretty active stuff. And you know what was kind of funny is when I walked, the hotel guest ambassador, he's like, "Oh, you're a floor trader?" I was like, "Yeah." He's like, "Oh, I was at LetGo for 18 years as a market maker." It was unbelievable. So, without further ado, I don't think we're gonna have our music.
No music.
All right, well, let's begin.
All right, Mark set the stage pretty nicely. I'm assuming you guys are recording back there, so that makes my job a lot easier. Yeah, Mark's right. Usually this show goes live about an hour later, noon Central, 1 p.m. Eastern, so envision it if you're listening to it later with music and everything. I bought a bunch of equipment to do the live stream, but quite frankly, logistically, it was just too taxing to set it all up, so we're going to do it this way, and we're going to do it live to tape, and then we're going to cut in all the music and everything else after the fact. So if you guys are ready, we'll get rolling here. All right, welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network. Remind you, if you're listening just to Volatility Views, you're missing out on pretty much a dozen other shows, so make sure wherever you're listening to this, you upgrade to the full network. And, of course, if you want to go above and beyond, you want to get our Pro Q&As. We had Scott Nations, the creator of VolQ, on our Pro Q&A this week. We have Options Oddities coming up later today. I don't think the Rock Lobster will be joining me for that one, and a whole bunch of other great stuff. You know where to go. TheOptionsInsider.com/pro is the place to go. And, of course, however you listen live after the fact, keep sending in those questions, those comments, those insights, those pearls of wisdom. We do love to hear from all of you guys and gals out there. And if I sound a little bit different, it's because I'm not coming to you from our studio today. I'm actually down the street from the studio in Chicago. I actually get to see the Option Pit guys face-to-face for the first time in what? Were you at RMC back a couple of years ago?
Yeah.
You were?
Yeah.
So that's probably it. About 2
years.
It's been at least 2 years. Yeah, it's been over 2 years. And they have aged beautifully, I must say, by here. But no, good to see you both again. Of course, Andrew, the Rock Lobster, GIOVINAZZI. We'll start with you to my immediate left, sir. Welcome back to the show live in person, sir.
I know. I left my rock.
You
did. Just for this crowd.
You left
for you.
the
Yes,
palatial estate in Maine just for this. This is your first time out of Maine, right? We're close to
first
it?
time I've been on a plane in 2.5 3 years. So
you spread your COVID to the rest of the world.
I did. I gave it to everybody. From the place I never leave, basically.
Yes.
Locally sourced.
Yeah,
yes. Locally sourced. I want you to know. Lobster fed, all the rest. It's the best COVID you could get.
When all this first happened, I was very envious of you. I was like, oh, you're in a compound in the middle of nowhere. You will be the safest person on the planet from COVID, and you got it twice.
And I got it. It doesn't matter.
And so far, I'm lucky. Knock on wood. We'll see.
Although I was ahead of my time. Now
were.
everybody's doing the same thing.
You were right pre-Omicron and all that. So you had original OG COVID.
Yes,
so you're much
yes.
better. All right, next to him, of course, we have the greasiest of meatballs, Mark Sebastian, from your event here at Option Pit. You're out of the southern volatility mecca. How's it feel to be back in Chicago?
It's good to be in the real mecca of volatility.
Yes, the real volatility.
Oh, man, it's been great. To go to a decent Italian restaurant, like...
Are you saying there's no good Italian food in Texas, sir?
There is. Certainly Austin, Texas. Red Ash is okay, but I got to be honest. The mediocre Italian in Chicago is ultra high-end in Austin. All right?
You're saying Giordano smokes anything?
Oh, my gosh. The pizza's terrible. The Italian food's terrible. But what is awesome, I've been getting to meet, we got 100 people here that I've gotten that are subscribers to me at Monday Morning Live and the things that we do, and it is so wonderful to get to meet these people. Yeah. And I'm going to go out on a limb and say that, the story of us being out of our locality for the first time in 2 years is not exclusive to this stage, right? Who's done some real traveling? Who's first traveling over the last couple of years is to Chicago, right? There's and all right, if you don't want to admit it's fine, but there are a lot of hands going up, all right, and a lot of people that won't raise their hands. So it's been really neat.
Why don't you mention this event? Why don't you give our audience really quickly, what is this event? What have you guys been doing here? Why are you in Chicago?
All right, so I do work with a company called Money Map Press, and we do live shows on MoneyMorningLive.com. Yep. So you can see myself about 4 days a week from 7:30 to 8:15 Central Time, and when I'm not on. Our guest who is about to be introduced fills in for me and does an even better job, right? I don't know why.
No. Minus the dad jokes.
Minus the dad jokes.
Yeah.
So,
well, you mentioned our guests. We are joined by a fourth panelist here, Chris Johnson.
Correct.
Why don't you go ahead and give our audience a little bit of an overview of your background in the options and financial space and what you do here at Money Morning Live.
You know what, Mark? I just shared with the other Mark. You guys can argue which.
Oh, Mark 2? Okay.
Yeah, which I don't know which is number 1 and number 2. You guys can argue.
Clearly,
that.
I'm number 1.
All right.
My
first trade in the options market was on Intel back in 1990.
Oh, wow. You
So we had
predated
to
me. I didn't get
call
out
the
there.
desk.
I didn't get out there till the late 90s. So, wow.
No, 1990. So I started as an options trader, started as a broker with Prudential Securities back then, got hooked into the options market immediately. And, 20-some years later, here I am next to Mark number 2, talking volatility with you guys from Cincinnati. So the only food I'm going to mention is chili. Because...
Skyline.
Yeah. But
it's so thin, though. Does it really count as chili? It's more like a topping.
That's what the spaghetti's there for. To slow things down a little bit for you. Yeah.
All right, then. With the team all assembled, we're going to dive right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down what the heck is going on from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives from the week that was, and indeed still is, going on right now. As I was walking into the ballroom here, the markets were looking decidedly red. So after a lot of back and forth throughout the week, they tried to fight to the green, then back to the red. Yesterday was a lot of swinging back and forth. Today they're hanging out to the red. At least they were when I walked in here. That means most of our friends out here in the vol space. And that's a good topic to discuss here for the week, kind of maybe the lack of inertia out there on the vol space, because most of them are up slightly or down slightly on the week. We're kind of hanging out pretty much right where we were this time last week. Spikes coming into showtime was just a tick shy of 30, 29.96. That puts it up about a third of a point. VIX cash was hanging out at about 28 3/4. That's down about a quarter of a point. VVIX, so the vol is at about a 105. That's down about 10 handles from where it was this time last week. Same thing with the Viking, our friend the Viking, aka VSpikes, down. I saw all the MIAX folks last week in Austin, in San Antonio. By the way, they love calling it the Viking. 140 down.
And you know what? They're not going to pay me for that.
They're not going to pay you that at all.
The Viking.
Tom was supposed to join us. He couldn't make the earlier time there, so we'll get him on next week.
It is good.
I saw Simon as well. He was down in Texas too. So
less than the cost of the SEBO to change their name.
Yeah, it is. All right.
But they didn't buy VIX.com and all that branding that they did. 140 down 10.5 points for the V-Spikes this time last week. So a lot to set the table with. Let's go around the horn. Let's start with you again, Andrew, because you're at next to me. I think you have to get going in a little bit as well. Obviously, a red, at least start to the day here. Vol markets, I think you can conservatively say for this week have kind of been,
Yeah. So one thing is so VIX is it's a 30-day instrument, so it's looking at volatility for basically 30 days on average from now, right? So it's not only catching the vol that's happening just today, right? So the traders are basically pricing, if you look at VIX like that, they're pricing the straddle for 30 days, the call and the put, right? So right now that straddle is $260, I think the last time I looked, $260, $280. So if you think about it, it's kind of pricing that low end mark that you talked about, $37.50, and pricing the high end already. So it's kind of got that range is priced already, right?
Yeah.
So it's like, so if we're really not ramping up 4% or selling off 4 or 5%, VIX is kind of priced the move already, right? So if we just keep, then the market's just kind of, it just kind of sucks, right? That's what you guys are, it's kind of stinky, right?
That's a good way to put it. That was my
thought. Yeah.
The market sucks.
So, but if we're down like 1%, down 1%, down, like how high can volatility go? How high can that range be? You're not going to have a $400 range for a 30-day straddle when we're only going down 1% a day, right?
You know what? Let me throw something in on that because we talk about 1%, 1%, 1%, and the market's getting consistent and dropping a certain amount or going up. At some point, volatility goes down simply because we're losing that volatility of up 4%, down 1%.
Exactly.
If we get standard 1% moves and the market get used to it,
we have compression.
Description of compression and no volatility.
Dude, 100%. 100%. So if you don't have that, so when you're trading, right, what you always feared was the rip.
Come on, dude.
You sell a bunch of calls, right? We buy stock in the old days, and then everything just goes moonshots, right? That's how vol stays high. It's the rip that kills you normally. You can trade into the, market going down, but it's the rip that really, turns my hair gray. Thankfully, that didn't happen to me for some reason. But anyway, so that's kind of where we are, Mark. It's just everything is kind of, it's sort of, you can feel that market grind. And when VIX is 30, it's not much of a trade, I have to say. I like trading vol, but I mean, you're getting 1 to 2 point swings in the vol products, and that's kind of exciting. You're not getting that, VIX going to 50. It's just, it ain't at least not now. It's not happening.
You mentioned the straddle. We did a poll this week on our Options Playbook radio show. Brian was talking about VIX and the 30-day straddle. At the time when we priced it up in the beginning of the week, it was only $240, the 30-day straddle in the S. And it was a pretty simple poll. Do you want to buy it at that level? It's too cheap, or do you want to sell it? And about 2/3, 62% said they want to buy it. It's too cheap. So I guess I can see that at that level, 240. Yeah, that does seem a little low. Mr. Mark, your thoughts as well on this crazy week and or weird week, I guess you can call it. And were there any interesting vol developments or discussions that you guys had here at this event this week?
I think we've had all kinds of discussions. I think it's been very option centric. I think the big nugget, one of the big nuggets I got is how bad the Coles board is, and all kinds of cool stuff.
All retailers screwed the pooch this week, did they?
Oh my
Except for BJ. Somehow a wholesale club can make money, but nobody else can. Walmart can't do it, but BJ can do it in this environment.
Yeah, I mean, I'm watching this market, and we're trading 38.50 right now, like almost on the nose, and it's taking steps down, right? We cracked 4,000 3 times before it finally broke. Now this is our third time cracking 3,900.
And this time it gives.
And this time it gave.
This time it gives.
Right?
Right.
Up next, 3,800.
3,800. But now we start to get into that free flow where everybody is now accepting the fact that we're moving it. I heard capitulation on CNBC for the first time today.
No, you didn't.
For the first
Really?
time. And at that point, and it's too early for that, but at this point you start to see those waterfall days, and then
Right.
we know where that leads.
Chris, are you a big technician? You like looking at the levels out there?
Oh, absolutely. I mean, I so much so that it is to the point where, the technicals on the VIX I'm watching anymore. We break through the 20-day today on the VIX, support a few days at the 50-day. I found out early, and I've been watching the VIX. I was once called out for using the VIX by Mark Haynes because it was voodoo science way back in the day.
That was back when it was on the OEX. It didn't.
Yes,
it
it was
trade.
on. Yes,
it was. To his defense, it was kind of voodoo back then.
It
Well,
was.
the OEX was kind of voodoo.
The ODX was voodoo.
But the thing that's evolved about the VIX is now because so many people are watching it, the technicals apply. People actually watch and respond to the technicals more than they do.
That's interesting because we debated that in the past on this show. We've kind of come down on the fact that technicals on VIX were, at least in the early days, were kind of a meaningless effort, right? Because VIX was kind of moving to the beat of its own drummer. But it seems like you think the technicals are more relevant now. Really.
Yep, I think we've become more sensitive to it. And the other thing that I've noticed is, we talk about the peaks on the VIX being that capitulative move.
Yeah.
And they've become less so over the last year or so. We've not seen those moves. They've been subdued in the VIX. So when I'm waiting for that big 80 read on it.
That is fascinating because obviously technically VIX is supposed to be derived from something else, right? It's a derivative of derivatives.
Correct.
So the fact that it's responding to its own technicals, not what's going on in the S, that kind of just shows what a big trading product it has become, right? It's its own beast now. It's not just driven by the whims of the S. It has its own levels, its own support and resistance. I mean, how long ago was it we were talking about it? We thought that was kind of, to use your term, voodoo, right? It wasn't the technical people who wrote in all the time with technicals on VIX, and we're like, oh, that's idiotic. But yeah, fast forward a few years.
Throw this in. We saw everybody started selling volatility in March, right? The end of March into April. They stopped selling mid-April. The VIX kind of leveled out again. And when you look at those technicals, 10-20s, you had crossovers as we were cross-unders. People are selling that volatility at those high levels just as you would a stock. So, yeah, I think it does trigger a lot of selling of that premium and buying of that premium in the VIX.
Well, and I think especially salient is maybe what's delivered that is the way the ETPs, the ETFs, have launched, in that there are people looking at the technicals on the ETFs, like UVXY and formerly VXX, but now VIXY, UVIX, SVIX, and in the tail can wag the dog.
Yep.
when people are trading technicals on that, right? So, we got a technical breakout in UVXY. It's now over. It's hit some Bollinger Band. It's oversold. Sell it, and that keeps the VIX in a range.
Because now you go into the volatility on volatility, and we start to talk about derivatives on the volatility on derivatives of the volatility, because now you've got to worry about the options.
Isn't it
traded
beautiful,
on that.
right?
And
You've got so the VIX is a derivative of a derivative, and then it has VIX futures, which are a derivative of a derivative of a derivative, and then you
UVXY.
And then UVXY is a coagulation of VIX futures, and then there's options
on it.
So you have a derivative of a derivative of a derivative of a derivative.
They're all kissing cousins. They're all, but yeah,
and it's all the same level 1, 2, 3 approval. It all doesn't matter.
Yeah, and it's not confusing. By the way, and there's nothing confusing about all that. Yeah, nothing.
Nothing at all. At all. Well, I want to come back to the stock and equity vol in a second, because we do talk a lot about earnings vol in a second. There obviously was a lot of that driving the market this week, but let's get into some of the, you mentioned the futures, let's get into some of that fun right now. Coming into showtime, obviously we have May off the board since last week, so June is our front month out there in VIX futures. By the way, Spikes futures, I was talking to those guys last week, they seem like they're pretty close to having ETFs, they think within, they said that they think a few weeks, so maybe I'm speaking out of turn, but they think pretty soon.
Then the product will fly.
Exactly, that's kind of the missing piece, right? They need that trifecta. They have the futures, they have the options, and once you have, look at SIBO, trying to get all these ETFs approved, right? That's kind of the missing piece of the trifecta that's going to drive the volume.
For those of you that are unaware, he's talking about the SPIKES index. There is a similar volatility index to the VIX that is run over SPY options called the SPIKES index. And then, so the SPIKES is basically the VIX, similar
pretty much the VIX.
The VIX on SPY. They do correlate at like 99.9%. And then the Viking is VVIX for, they were calling the spikes. They were going to call it the V spikes. I go, you've got spikes. What are you not doing calling it Viking? And so they owe me $1.5 million is what I've decided.
That's at least. I think you're negotiating that fee as you speak. But yeah, they figure a lot of people trade SPY more than SPX, especially for this audience. I'm assuming most of you trade SPY.
They're all SPX traders.
Really? All SPX traders?
All index, right?
Oh.
Who here trades SPY? Who here trades SPX?
Wow. Okay.
Yeah.
You can't go
Rule
wrong with
1256.
Yeah, you can't go wrong with tax breaks. Hey, those are all good.
We're not allowed to talk about that. Look it up, folks. You're going to be happy.
But yeah, interesting stuff here. So yeah, the May's obviously off the board. Looking at June now, both of these futures were almost literally unched. I can't remember the last time we saw that on the show. I think June was down about 1/3 of a point on the week, and July was literally unched from this time last week. So not a single change on the futures. So I'm assuming, Andrew, you didn't see a lot lighting it up. It's still, I think we called it last week, weirdly flat. I think that still kind of applies for what we're seeing out there on the vol surface, sir.
So we have again, if you go to VIX Central, which is a free website, you can see the VIX curve. And it's flat again. Oddly flat at a 30 vol. So
cool stuff.
I could give you some, volatility, mumbo jumbo as to why it's like that, but it just is. So generally though, when you see the flat curve, which is all the futures basically are the same price going out, to Christmas. And that's a result of the pricing in the SPX, just the volatility in each term. And the flatter the curve is, the more uncertain, again, this is an observation for me, but it tends to work. It's the more uncertain traders are about where volatility in the SPX is going to go. And generally, it moves like 5 to 6 points once the curve flattens from that point. So we saw it last week, we were 31, 32. Dropped down to 25 in 2-3 days. We drifted into a slight contango, which just means the front end of the curve is higher than the back end of the curve. Generally, that means vol drops, and then boom, it flattened up again, and up we go again. So it's a thing to watch when it happens. But what hasn't happened that we could remember is we were at a flat curve with volatility so high. So the market's basically in my opinion, the vol traders are just throwing their hands up and saying I don't know.
There's a lot of confusion out there. I think among vol traders, among the vol people, is why hasn't And there's, Andrew's got some good reasons. But on some of these big shocks, right? What day were we down 160 points? Was that Monday?
I think it was Monday or Tuesday.
Yeah, one of those two, Monday or Tuesday.
Yeah. And we're up. That is a day that should drive vol to 35 or 40.
Right.
And it's not.
Yeah, barely budged 30.
Weird.
It was not super fun for me on the for the
long
vol. It's like,
you were
oh good, I
guess you got upside again.
Days on the back month.
I made 25 cents.
Like the moves in the last week of expiration.
Well, I'm sorry,
Chris.
No. This is a great story.
So this is old school. When you looked at the VIX, and this is back when we were on OEX, and you were extrapolating out to the back month. That last week of expiration before today, expiration Friday, you would actually have subdued moves in the VIX simply because the back month was now taking charge in terms of the weighting, the forward and back month weighting. So you now had a focus on the back month expiration options instead of the front month, which were more volatile, given on a Monday of expiration week. So
that is funny. The whole notion of expiration Friday now, it's become kind of a quaint concept. We have SPX going daily. Are you guys excited? You guys are all SPX traders. Are you guys excited by daily SPX options? Are you starting?
Mark has them trading daily options.
Yeah? All right.
Yeah, guys. Oh, come on, guys. Give me more than that. Yes.
Are you doing like Tuesday, Thursday spreads? Why are you so excited for daily SPX options?
Daily flies.
Trading that expiration
daily flies. All right.
Is awesome.
All right. I was talking to the CEO of OCC down at the OIC conference last week. And I asked him about
OCC is the Options Clearing Corporation. OIC is the Options Industry Council.
I throw around too much jargon.
You are
sometimes.
Captain Jargon today.
But and he's the person who clears all your trades pretty much. And I asked him about his thoughts on daily expirations and the SPX. He thought it was okay for the indexes. But people have obviously been asking, and one of the big topics at this Options Industry Conference last week was, are we going to have dailies in, let's say, an Apple or a Tesla? And his eyes kind of went wide at that thought. He's like, yeah, no, we're not anywhere near there yet. For clearing purposes, their one biggest nightmare is the corporate events, right? And how to figure out emergency dividend in the after hours and strike adjustments.
Yeah.
And they don't think they can get that done in one day. So if you're excited, it sounds like you're all excited about SPX dailies. I don't think we're getting Apple or Tesla daily anytime soon, unfortunately. So they need a lot more plumbing behind the scenes. But yeah, I thought that was kind of fascinating for all this interest. And hopefully we'll get, NASDAQ and everything else following suit. Daily VIX maybe sometime soon. There we go.
Let's see some volume. Let's see some volume in the weekly options before they try and bring daily VIX.
Right, yeah.
Because right now the weeklies are just awful.
They're not very good.
Speaking of volume, let's get out to the options volume here. Spikes overall OI still looking pretty similar to last week. Like I said, I was talking to those guys last week, and they're still waiting for that last piece of the puzzle. It seems like the SEC keeps punting on the approval of the ETF. So hopefully we'll get that, and that'll really start driving some new paper. VIX options, speaking of paper, was actually doing some paper today. When I walked into the show, they had already done about 314,000 contracts. That's pretty much more than half of the ADV. The ADV has soared since last week as well. It's up 65,000 contracts to 592,000 contracts. So it seems like they
average
have a pretty,
daily volume, ADV.
Pretty. Don't you teach these people? What are you teaching these people? They don't know ADV?
They probably do, but I don't want to assume.
All right.
You know?
I assume they're your students. They're on the bleeding edge.
No,
of
they're
all
brilliant.
this
These
stuff.
are brilliant, but they maybe don't know all the jargon. Okay. Most of you knew what he meant by ADV, though, right? Right, but still, there's people watching from home, right?
Yeah, there we
you
go.
Might not know.
So today, looking at about 314,000 contracts, the hot trades today. Actually, before we even get to all that stuff, let's break down the top 10. Let's see how is it lining up. We obviously had expiration, taking some contracts off the board. So OI a little bit lighter this week than it was last week. But what are the top 10 size positions in VIX options right now?
How many of them are the 75 strike across?
Well, that's still number one. You're letting the cat out of the bag there. But yeah, right now we're actually in the top 10. It has switched. Last week it was 70-30 puts over calls. This week it is 50-50. So that kind of speaks back to what we were talking about with the VIX futures curve as well. It's kind of a coin flip. Nobody knows what the hell's going on out there, right? Number 10, it costs you 125,000 contracts to break into the top 10 right now in VIX options. That gets you to the NOV 70s mark, so not quite your OX 75s, but pretty close. Number 9, 128,000 of the June 21 puts. Number 8, also 129,000 of the June 70s. So again, these, shall we call them funky upside strikes, are dominating a lot of our OI out here. Number 7, 130,000 of the June 60s, so got a nice little call strip there. Number 6, 130,000 of the June 25 puts, so finally, some, dare I say it, relevant strikes. Number 5, 131,000 of the June 23 puts. Number 4, 138,000 of the June 30s. So again, that's a
That's
quasi-relevant
yeah.
strike.
That's real.
Number 3, 139,000 of the the July 20 puts. Number 2, 196,000 of the June 24 puts. And number 1, Mark, your favorite trade of all time. I'm sure Mark has all of you in this right now. The 254,000 of the October 75 calls. They haven't touched this. They don't seem like they have any inclination to touch this anytime soon, these Oct 75s.
No, I mean, because he's got this on another month smaller. October's the big one. That's the top end of a 1x5. So the guy sold 135 call and bought 5 of the 75 calls. And so I'm almost certain it's a credit guy, that's really worried about, basis spread blowing out. Right? Because, and I think I said this to either you or Garrett yesterday, VIX is true. If you don't want to literally hedge against your book using U.S. Treasuries, the only way to hedge basis spread is using the VIX index. And so you're thinking, it's on, S&P guys are using it. No. It is all bond guys in there.
Well, we've been talking about that, lately. It does seem like there has been, whether it's a new audience has awakened to using VIX or they're just coming up with new ways to utilize it. Because in the last couple of months, how many, not just 75 is tame. We're seeing pars, 110s, SEP 120s, these what we would traditionally consider garbage, nonsensical strikes. But going up for size, we had Matt from Orats on the show last week, and he's actually been dabbling in those. He loves his weird wings, and he calls them his garbage VIX calls. And he actually said they've actually kind of been working out for him. You have to be pretty deft on the trigger finger with those, obviously. So yeah, people clearly, if you think October 75s are outrageous, there are many, many strikes beyond that going out to June and September that have tons of open interest well beyond the 100 strike. And so these are, interesting stuff. Obviously, you don't have to get there to make money on those. Obviously, they can pop for a lot of reasons, but still, it is kind of interesting. Chris, are you a big watcher of VIX options? Is it something you kind of watch day to day?
Yeah, not day to day, weekly or so. And when I'm talking to Mark here on the side about that 75, I like that a lot.
So you like that? I can see your eyes peek up.
Well, I just said 80. I'm looking for that 80 on the VIX before I can move forward with buying anything with both hands, making one of those moves that feels a little silly.
That's your capitulation moment, 80 in the VIX?
Well, if I look at history, yeah. From a retail guy's perspective, somebody who's looking to back up the truck and just start buying stuff, 80 is going to be it. I mean, we hit that in April.
We did flirt with that in March of 2020, right?
Yeah, March, April 2020.
And then we hit 80s in November
09.
of 08? 09.
Yeah.
So,
that's that point where everybody is, I call it the Kevin Bacon moment, where Kevin Bacon's standing in the middle of the street, and it's going to be Jerome Powell going, there's nothing to worry about. It's
Animal House. Is that Quicksilver where he wades into the pit on a visitor's badge and starts slinging size on expiration day? That's one of my favorite movies of all time. Yes. You're a Pecos guy. It must offend you to your core.
It does. Actually, they shot that movie 3 years before I started down there. Because all the guys that I traded with, because I'm old, but anyway... But yeah, they all they all got roles.
I used to stand next to some Pecos guys on the Seaboard. They used to just lambaste that movie all day. Like if you watch it, he takes a visitor's badge, just walks in, just starts slinging.
Just starts trading.
Only a trader would think that's funny, but
I don't know you, but sure, I'll take the other side of everything you want.
But you actually can't do that in real life.
No, you cannot.
You cannot. You just can't walk on the floor and start just trading this thing. And then didn't they cash him out too?
Yeah, they did.
They
give
him his money,
mark to market right there. All his positions closed. He's good.
Yeah.
Another great trading scene as a random aside. If you have seen Trading Places, watch Eddie Murphy at the end of that in the FCOJ pit. He has admitted. You listen to the commentary on that scene. He says, "I have no idea what I'm doing. I'm just making nonsensical gesture." And if you watch it, you can totally see he just literally has. It's pretty hilarious if you have ever traded to watch Eddie Murphy try to write up trades. It's pretty good stuff. Yes. But I digress. Let's get into some more of these VIX options. Like I said, 314,000 contracts on the tape today. So the big trade today, actually all puts today, which is kind of interesting. 30,000 of the June 23 puts, 20,000 of the June 26 puts, 20,000 as well of the June 24 puts. You got a whole put strip. And then 15,000 each of the SEP 22, 26 is like a bit of a put vertical there. 22, you like that in SEP? SEP 22, 26 put vertical. 15,000 times that went up this morning, Mark. I'm guessing they were buying.
Put spread?
Yeah.
I mean, it's reasonable. It can happen, right? The speed with which the VIX drops down to 20 when people think that maybe we're going to get a big rally is astounding.
Yes.
And every time it does it, you should just buy it, all right? And take the other side because we have not had that capitulation moment. They're going to sell the rips, but the rips have been incredibly violent, right? The S is the nickname is the short for SPX. I know you guys probably put 2 and 2 together, but
they all trade it. They're all SPX traders.
They are. So yeah, you say, oh yeah, no, I trade the S. That's what you tell people.
That's what sounds like a cool kid.
And
now
now you're big time. Right.
Yesterday we saw a lot of paper. This was a pretty active week in the VIX. Pretty much every day was well over the ADV. Yesterday was 732,000 contracts on the big trade. Yesterday it was kind of a mixed day, so we kind of see that reflected in the volume. The big trade yesterday was 77,000 of the June 24 puts. So this looks like there's still some faders out there. 66,000 of the June 25 puts. Then we get out some of the more funky strikes. 28,000 of the June 40s. That's actually comparatively reasonable compared to some of these other strikes we're seeing. 27,000 of the June 30s and 27,000 as well of the June 35s. Wednesday was the most active day of the week, at least so far. 811,000 contracts on the tape. The big dog on Wednesday, 67,000. These June 24 puts have been lighting it up all week. Somebody's really got an axe to grind. Those 70,000 on Thursday, 20,000 today.
Hope springs eternal.
70,000 again on Wednesday. Wow, that's a ton of paper. 55,000 for number 2 of the June 90s. Now we're back out to the redonkulous stuff.
So here's a question: what if he's not? What if the VIX puts are a hedge against a massive short?
Yeah,
that's something people do, right? So I think the market is going to what, right? I'm Garrett, I'm CJ, I'm me, and I'm Andrew, and I've got $500 million in short exposure to the market. One of the effective ways to actually hedge off that position is buying VIX puts, because it can work. It can work in 2 ways. The market stops going down, vol implodes. The market goes up, vol implodes even harder. So I'm just an idea. What if that guy is massively short S&P futures and he's using that as a hedge?
Wouldn't surprise me at all. That's one of the things to keep in mind when you're looking at. I'm kind of throwing a lot of VIX numbers at you right now, but one of the things to keep in mind is that oftentimes, particularly with VIX, we were kind of joking before, it's a derivative of a derivative of a derivative. But so much of this paper has something else on against it, whether it's crazy upside calls, they're hedging a credit portfolio. Mark was specking that maybe these guys took it on downside puts against being massively short. There's usually another leg that's not in VIX, that's on somewhere else. Could be in the S, could be a credit portfolio. So when you hear all these papers, like all these trades, like the second most popular trade on Wednesday was 55,000 of the June 90s. He could be straight up gobbling those up, but probably not. He probably has a credit portfolio or something else that he's looking to hedge, followed by 54,000 of the June 65s and 45,000 of the June 30s. Tuesday, again, another active day, almost 750,000 contracts. So this is the week maybe we've been waiting for from a volume perspective. Last couple of weeks has kind of been languishing a bit. The big trade on Tuesday was 38,000 of the May 25 puts, so those obviously all went out this week. 35,000 of the June 35s, 34,000 for number 3 of the June 24 puts, number 4, 32,000 of the May 27 calls, and number 5, 30,000 of the May 26 puts. Then we'll get to Monday. Again, Monday was another one of those crazy cakes days. 650,000 contracts on the tape, but the big trade, SEP 75. So not just ACK anymore, it's SEP 75s. 110,000 of those went up on Monday. So
was that done against the 35 calls or no?
I don't have anything. I see 36,000 in August for number 2 of the 32 halves, and 27,000 of the SEP 35. So that does line up 1 by 5. So yeah.
So that's what it is. The 1 by 5 guy's back. Yeah.
It's the same guy. He's doing it in September. He's not even going all the way out to August anymore.
He's doing it everywhere.
He's doing it everywhere.
He has it on in June.
Why don't you really quickly break down this trade for our people that don't know about it, the 1 by 5?
Sure. So a 1 by 5. That is a massively leveraged call play. So I sell 1 call at the 35 strike. I buy 5 calls at the 75 strike. And so if the VIX just kind of goes up to a little and hangs out around 40, I'm going to get my butt handed to me.
Yep.
But if vol truly explodes, it gets to CJ's 80 level. What did he pay on the 1 by 5? What was the net on that?
I don't have the net.
I thought it was like, I thought he did like
he's
spread
been,
around
he's
a
been doing
credit
it
or
even money mostly.
Yeah.
So let's say I pay nothing for that. All right. So I sell 1 call at $5 and I buy 5 calls for $1. All right. When the VIX gets to 80, so yeah, you're going, oh no, right? Those 35 calls are probably $60, right? Sounds terrible, except for implied volatility on VIX goes up so much that each of those individual calls that this dude or girl paid $1 for are probably going to be worth about $35 a pop. Okay? So, yeah, you know what? The dude lost $80 on his one trade, but on his other one, 5 times he made $34. Not a bad way to make a living. Not a bad way to make a living. But you have to have, but again, this is not just some person betting on vol exploding.
Right.
They're worried about it.
Right.
Right. So that's the thing about these huge hedges, right?
There's something else out there.
Yes, there's something else out there, but I don't know. Just because this person wants to do this should make you nervous, right? I don't know. What do you think?
I'm already nervous. Are you kidding me? I don't need this guy putting these trades on to make me nervous. I mean, I'm already there. I'm sitting here writing them down, taking notes. No, I think it's, as I said, when I look at it, and especially going out to October, we all know that September's that month. When you look at the VIX,
right.
The VIX typically goes up 20% any given year in September. I mean, that's just it. It's seasonally hot in September, not temperature, but VIX-wise. So, yeah, I look at that and say the October, I've still got time for this to play out. I'm not going to get slammed around on it. I love that in September. Volatility covered in the Octobers right now.
New 1x5 trader
that
coming up here.
That 1x5 is nice.
Well, Chris, you've been waiting patiently, so let's get to some earnings vol this week. 'Cause obviously, we had a lot of it. This was a big week, particularly for those big box retailers. Just some of the names that were popping off this week. Tuesday, we had Walmart, kind of the king of them all. Where Walmart goes, a lot of them tend to follow. Tuesday, we also had Home Depot. Wednesday, we had Target. They kind of followed Walmart right down that big sucking sound. Lowe's, Bath and Body Works on Wednesday. Cisco as well, Uncle Mike's nemesis name. Thursday, we had Kohl's and BJ's, the lone ray of sunshine, and then John Deere and Foot Locker were today. I have some vol numbers, but I know, Chris, you watch a lot of this earnings vol. This was one of the big. It's been macro for a lot of the last couple of weeks. This week, it seemed like everything was driven by a lot of the earnings. What was catching your eye and lighting up your tape this week?
What was catching my eye, especially on Walmart specifically? We look at the volatilities. We got an implied VIX on individual companies that we watch. Nothing was moving. Nobody was doing anything on the Walmart options ahead of the earnings. So that's one of those situations where I look at it and say, man, I'm expecting somebody to do something.
I think now, especially inflation's killing everything, right? Why wouldn't you have something on Walmart?
I mean, they've been relatively high to where they were 3 months ago, but they weren't moving ahead of the earnings reports. And that's one of those things that sets off my alarm and goes, man, this if it fails, it's going to fail big because now everybody's going to be catching up. Nobody's hedged on that. That has been the case with a lot of the retail names, not the technology names like Cisco.
Right.
Cisco's been, Cisco and all the technology names have been picking up ahead of earnings. And for me, it's more of a sentiment read. I'm looking at it saying, well, everybody's waiting to be blindsided. We get nice consumer reports last week. I mean, the consumer's alive is what we hear. And then when the other shoe drops and Walmart tells us, hey, you know what? Inflation really is a big problem. Everybody's naked on this thing. Everybody's running around trying to cover their butts now.
That's crazy because this has been, obviously it's not new news that inflation has been ravaging the economy.
Oh, it's new news, Mark. Come on, it's new news.
Who's surprised that that Walmart is being hit by inflation, right? Yeah. But so it sounds like you're a pretty active earnings trader. Some people avoid it. Some people like to trade around earnings. Are you a big earnings trader?
I always take it on the other side. I don't want to pay for it by getting right in front of earnings. If I've got positions, usually I'm looking to try to close them down or bring them down a little bit ahead of earnings. It's just a wild card. I mean,
is that in the equity or in the options? How do you normally trade?
Oh, it's the options. Options, yeah. And right now, the trade that's been working on all the options, with that volatility dying down ahead of earnings. Microsoft was a good example. Ahead of their earnings, they popped, but then they dropped right after you got that little rally, and every one of these fades has been working great. I mean, it's been working like money. It's a pattern. You could just draw one. Remember the old overhead projectors? Where you had the dry erase marker, and you could drop that on every one of these earnings in the tech space right now, and it's going to be the same thing. And volatilities right after earnings, as they normally do, they drop. I mean, They start to implode, which has given me the opportunity to come in and, all right, I'm going to short
cheap puts.
Cheap puts, right.
We had a lot of listeners for years ask us about earnings season, and they would say, what's the deal with earnings season? Should I buy vol? Should I sell vol? And it stunned me that for years there really was no data on this. There was one Goldman study that's over a decade old at this point. So I kind of strong-armed one of our contributors here, the folks over there at ORATS. They do a lot of great analysis and data into crunching these numbers for our audience. So we have them all there at our website now, theoptionsinsider.com. We do a bunch of different reports, earnings just straight up earnings so we can see what they're pricing in from a straddle perspective, how they performed in the past. We have the results reports, we have some here for Cisco right now from this week. Cisco was the 18th after the bell. They were going into their announcement $48.36. Obviously, they're straddle, so that at-the-money straddle, which is usually what the market is expecting in terms of movements. They were pricing in 5.6%. They delivered 14% almost to the dark side. They got annihilated. So Cisco not looking good. BJ's, like I mentioned, one of the few rays of sunshine, it seemed like here. They were trading $53.50 going into the announcement. They were on the 19th before the bell. They were pricing in almost 12%. They actually delivered 10.6%, so they kind of underperformed. That's how we look at earnings. We look at it more from a net movement and volatility. We don't care about direction. It's more about how they perform from a vol perspective, and so that one has underperformed. And one of the interesting trends we've noticed since the onset of the pandemic was really for a long time, it was all about vol underperformance. A name could almost say whatever they wanted, it didn't care. They could revise their guidance for the entire year, and they would come and they would annihilate the vol, and they would crush the straddle. In the last few cycles, since we've been tracking it, that has started to change. We've started to see some outperformance. I'm looking at some names here, like we have names coming up this week. We had AMAT, Applied Material, after the bell. They were pricing in $7.32. I don't have, this is just going into their announcement. They were at 111. In the past, they've only moved $4. So they're pricing in nearly a doubling of their straddle there. We also break it down by season. If you look at the season here, this season is starting to get a little bit more robust. During a lot of the depth of the pandemic, the seasons they're hanging out around 70-odd, 80%. That means if every name moved exactly as much as they were pricing in with their straddle, that would be exactly 100%. So numbers below 100% means names are underperforming. They're not moving as much as was being priced in.
Too much
movement. They're pricing in too much vol, and everyone was getting crushed. And we have seen the last couple of cycles that is starting to change. And this season right now, we're hanging out right about 90%. This last week has been one of the most aggressive, 107%. So we saw some outperformance of their straddles there. That makes sense because this last week's some kind of crazy. The week before that was 86%. The week before that, 110%. That was the craziest week of the cycle. Then the first 2 weeks were not very good. Week 2 was 76%. Week 1 was kind of an apocalyptic 65%. So you got about, if you bought straddles that week, you got about 2/3 of your money back. So right now we're hanging out at about 90%, which is kind of the historical average since the start of the pandemic, which is about 88% out here. We also track a lot of earnings trades. So if you're intrigued by those, again, check out our site. They track short straddles, long calendars, short calendars. That's kind of an esoteric trade, short calendar. You don't see those very often, but they are tracking 80 of those right now. Wow. They're putting them on and taking them off. So if you're intrigued by those, again, I encourage you to check those out. We have those all available up for free on our site if the mood should strike you. Let's get on out. Speaking of things striking us, I know a lot of people have been interested. This is an interesting audience to kind of pull as well. You're all SPX traders. Are there a lot of SVIX people in this audience? Are they interested in inverse vol? You guys trade SVIX at all? That's that new inverse VIX product they launched. Oh, I'm not seeing a lot of hands.
That is a zero.
We talked about it, but
interesting. Okay,
we've talked about it, but the option volume still stinks.
It does stink. From an options perspective, it's kind of anemic. But yeah, this is kind of a bleeding edge crowd that they would at least be intrigued by. Yeah, coming into the show today, it's another one that's pretty much unched on the week. It was 10.55 up a nickel. In terms of volume, you're right. It's only averaging about 600 contracts a day. So SVIX is not exactly lighting the world on fire. Today, Safari had done a whopping 300 contracts when I walked in here. And the big position out there today is all expiring today, the 7 puts and the 8 puts, about 300 each. Have you guys been watching SVIX more and been trading this?
I haven't traded. I'm sticking to UVXY as a product just because some of the vol products have gotten so.
We used to slam that as being crappy, and now it's comparatively. You
understand?
Uncrappy, I guess. I mean, at least it's but they cut it down so much that it's basically they cut the gearing down in half. So it used to be a good short volatility product, and now it's only like the little it's the little step brother kind of.
Chris, these products are kind of new. The return of inverse and levered VIX products. You've been watching the VIX for a long time, since the OEX days. Are you intrigued by these? Does an inverse or a levered VIX does that kind of intrigue you?
Yeah, absolutely. It intrigues me because it's opening up, as we've seen over the last 10, 15, 20 years. People in this room are now getting involved in trading volatility through these vehicles. You don't have to go and buy an option on the VIX. You don't have to mess with futures. You can buy these ETNs right now. And yeah, I think from that perspective, and going back to where Mark and I were talking about, derivatives on derivatives on derivatives, now you've got a larger crowd that are playing them, which is either good or bad. You can take either side. I mean, you can start to cloud it up a little bit. No offense to everybody here, but it starts to turn into less of a pure play on the VIX and volatility. But I think it's intriguing because it does open up that idea of, hey, you can hedge your portfolio just like anybody else's with these simple purchases, or going down that rabbit hole of the derivatives on these simple purchases.
Well, there's another thing, right? When the bloodbath happens, right, and you don't want to go long stocks still or something like that, you could theoretically buy like put an SVIX in that'll be VIX at 80, SVIX will be, what is it now, 10? You said 10 something?
Yeah, 10 and a half.
All right, so VIX goes to 80. That thing is going to be down to like $2.
Yeah, that's my question. How low can this thing go?
It can get there.
No.
I'm very intrigued to see how low this thing can get.
So that thing gets to $2 and the VIX is at 80.
Buy the hell out.
I'll buy 5,000
Right,
shares.
but remember too, in the old days when we had vol kept getting crushed and we had single-digit vol, or when realized vol got down to like 4% or whatever.
Yeah.
You remember those products flew, right? They were the trade of the year, the short VIX products, and that's how. Remember the vol-apocalypse? Do you guys kind of remember that term? And
anybody remember XIV?
That was 2018.
XIV, ring a bell to anybody?
2018.
All right.
But that was like, that product got to like $100 and something because as vol went down, that just kept going straight up, and everybody thought this is the easiest money in the world.
Yeah,
and then it all went away.
If it gets to 2, you buy a bunch of it at 2, the underlying, then maybe you buy like a half put just in case these new SVIX guys are. Because if it goes to 2, it could go to 0 like XIV did. That's why these products are so contentious. Like I just came back from a big industry conference, and there are a lot of people who are professionals in the option space who think a product like this should not exist. I think it tracks people into a trade they don't understand. There are risks inherent in it that they don't understand. And we did see a lot of that on our network back in 2018 when the XIV meltdown happened. We were getting hit up by your proverbial grandmother from Iowa, right?
Yes.
Who's like, I had this thing and it went to 0. I'm like, you never should have been in this product. You didn't understand the inherent risks. And someone dropped the ball along the way, whether it's the broker, the exchange, whatever it was, and not educating these people. So we try to do that on a show like ours. But intriguing stuff. So you guys don't sound like you're in the SVIX rabbit hole. What about, I know you guys have been more bullish on UVIX, the 2x levered. Are you guys interested in a 2x levered VIX product? Does that excite you? All right, a little few not.
What about UVXY? Who here likes to trade UVXY?
Well, they're your people. They should be trading.
Yeah, there's some UVX.
But eventually, it will get there. All right, eventually, I'm going to say it's happened a little slower, but the volume in UVIX has really heated up. Within the next 6 months, all of you will stop trading UVXY, and all of you will start trading UVIX because it has more leverage, moves harder, and the volume will get there.
Or the new Spikes product.
UVXY is 1.5 VIX. UVIX is 2X.
2.
What would you rather have as a trader?
I know what I want.
Yeah.
Yeah, so UVIX putting up some numbers today. Come into Showtime, it was at 19 and a quarter, up about 120 today, so a little bit of a pop. You're right, but the options-wise, this is much more of a player right now than SVIX. ADV is about 1,500 contracts. It's up a couple hundred this week, but it's already put up almost 1,800 today as I walked in here. So this one's obviously growing at a much faster pace than SVIX. All right. Mr. Rotlaps, you have to go. Before you go, you have any last words for us, sir? Good seeing you.
The crystal ball, I'm going to do 2952.
Oh, 2952.
For the crystal ball.
2952.
All right, you're getting ahead of me, but I like it. All right, good seeing you in person. Glad
All
that
right,
you
later,
worked,
Andrew.
All right, guys.
5 minutes?
I can confirm proof of life.
5 minutes.
5 minutes. Okay, so you know what? I have more products to get to, but we also have a section called the Crystal Ball where we predict vol, and we also have a vol voicemail section where we have questions. We have questions from our audience, but really quickly, do you guys have any questions? I'll get to some of you guys before we get into our prediction game then. Going once? You have a shy crowd, Mark. I don't know. I guess we're...
I know.
All right, so we'll get into... we'll move right over the volatility voicemail this week and go right into the most difficult, the most dangerous portion of the show. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. This is indeed the portion of the show where we attempt to wrestle with the volatility gods and explain or try to determine what they have in store for us in the coming week. What did Andrew just say, 2952? 2952. So we'll have him marked down for that. Of course, we had on the show last week, it was myself, it was it was Andrew, the Rock Lobster, and Matt from Orats, the keeper of all of our earnings data. And I don't know, where's VIX right now? Give me a quote right now. Give me a VIX quote. We'll see how we're looking here.
It is... I was just looking at it. It is moving around, dude. We're down 70 now. Wow. VIX is 31.21.
Oh. So I was close until I wasn't, as always. I was 32.35 for this week. Andrew was lower, 27.85, and Matt was 33.40. So we have no joy. We have to be within a tenth of a point to win on our game. So it's very demanding.
This is borderline impossible.
It was extremely challenging in the height of the pandemic when VIX hit 80 and around those levels, getting within a tenth of the point. We have managed to have some bullseyes, so that was kind of interesting. Looking at some of our listener suggestions here, we got some close ones. We'll have to have our producers go through and see if there were any winners. So we already have Andrew on the board for this week. Chris, this is a very difficult, a very dangerous game. I would understand if you want to abstain.
I need to know what is on the line and what is going in my pocket.
What is on the line? Well, for this show, it's mostly bragging rights.
I was going to say
for
glory.
the guest. At the end of the year, when we kind of calculate it all up, like the regular contributors, we kind of have some sort of prize we give out for that. But for the guests, it's more just you can look a week from now and say, hey, I smoked everybody on this vol guessing game. Which, again, it's widely known in the vol space. So, Chris, Andrew has already come in and guessed for next week. He has said 29.52, so I will mark him down. This is for pretty much exactly this time next week, the end of our show next week. What are you feeling for VIX Cash this time next week, sir?
I've written down a number, and it is 35.27.
35.27. And he has it on paper in front of him, so it's official. It is real. 35.27. All right. Mr. Mark, I'll let you go next because I'm that charitable of a guy, sir.
What did I guess 2 weeks ago?
I don't have you here for 2 weeks ago. I have last week, but I don't have 2 weeks ago.
All right. What did Andrew guess last week?
He said 27.85.
I'm going to guess 27.85.
There we go. Keeping it in the family there. All right, 27.85. That's a wide market. 27.85.
Yeah, you got a lot of room.
I don't hate where I was this time last week, and I think that was me from the week before.
32?
32.35. I kind of carried that through the last couple of weeks. It was a bullseye this morning until it wasn't. I'm gonna cheat. I'm gonna adjust it a little bit. I'm gonna say 32.25. It's just the third week in a row I've been on that level. I hate doing that, but I don't mind that. So that's our market for this week, listeners. 27.85 on the dark side with Sebastian ripping off Andrew from 2 weeks ago. Then Andrew at 29.52, and myself at 32.25, and Chris at 35.27. All right, that's going to do it for Volatility Views this week. I want to thank you guys. You were a great audience. It's fun to do this in front of a crowd again. And before we go, Chris, if our listeners are intrigued, they want to check out what you guys have going on here at Monday Morning Live, where should they go? What should they do?
They should go to Monday Morning Live every morning, 8:30. I mean, check us out.
There we go. It's pretty easy to do. All right, Absolutely. Mr. Mark, outside of your big event, I know that's your big thing for the week. What else you guys have cooking over there?
I do the show every day, MondayMorningLive.com. It's really a great show and worth your time. It is. If you're stuck still watching the garbage they put out on cable TV, it's time to change your habits.
Hopefully no one here is doing that. Hopefully they're more educated.
These are people are way too smart for that. Yeah.
And of course, you guys know where to go to learn more about all things spikes. MIAXoptions.com/spikes is the place to go to learn more. And we'll see you guys next week. Stay safe out there, and we'll see you next Friday, another episode of Volatility Views.
Well done.
It's too bad Mark doesn't have a good voice for radio, right?
Wow.
Wow. It's that tenor voice of his that's so
soothing and yet exciting.
Oh my gosh.
Yeah.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's Volatility reimagined. Learn more about spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.